It's a financial revolution seismic and impossible to ignore. The US dollar's reign is ending, and a new currency is taking the spotlight. This isn't sudden. It's a transformation set in motion since the 2008 financial crisis. Right now, we're witnessing a turning point in economic history. This moment sweeps everyone along, regardless of background. The coming redistribution of wealth could radically reshape your future. This isn't speculation, it's already happening. Money itself is evolving. It's a real question. Are you ready for this new era? So what does it all mean? There are two main views. Some warn us debt is out of control and the dollar must go. Others say there's no alternative. The global economy still runs on dollars. On the surface, it's the dollar is doomed versus the dollar is irreplaceable. But here's the twist: both views can be right. Even if the world moves away from the dollar, the same powerful players, American capitalists, still control the system. Like an emperor keeping the throne in the family, power just shifts hands within the dynasty. Even if the emperor weakens, the dynasty adapts. The capitalists aren't worried. They'll simply roll out a new currency, swapping emperors, keeping their rules. Control remains. Only the facade changes. This reset could restore US currency dominance and repeat economic exploitation, like hitting restart on their global game. For perspective, 100 years ago, gold was king. Paper dollars meant little unless you could trade them for gold, the currency of God. After the 1930s, nations used dollars for trade, trusting they could swap them for gold until the US ended the gold standard. Suddenly, dollars were backed only by trust, yet became the world's currency. That shift upended global finance. Now, in 2025, history repeats. American capitalists are pushing a new digital currency, promising security, convenience, and access to the future economy. The message: trade your dollars for this new currency. It's the same playbook: build trust in the new system, and US dominance continues as before. Once the world trusted the dollar, gold backing didn't matter. The US broke the gold link, and the dollar stood alone. They'll peg a new currency to the dollar, win trust, then break the ties, just like before. The cycle repeats. Now about Bitcoin. Critics call it worthless. But would you refuse 10 Bitcoins if you could instantly sell them for $1 million? Probably not. The new king won't be Bitcoin. Its main role is paving the way for what's next. Here's why. The recent Genius Act officially recognizes cryptocurrencies. On the surface, it protects wealth and promotes progress. In reality, it's clearing the path for the true successor, the stablecoin. If stablecoins take over, the entire game changes. Yes. The US won't need buyers for its bonds or outside lenders. With stablecoins, Americans can bypass the old system, a total reset of financial power, disguised as innovation. So what does this mean for you? You want to protect or grow your savings as the new currency era arrives? Subscribe to this channel. We'll keep giving you the insights you need. If you're worried about forgetting all this, just like this video, it'll save to your playlist for easy reference. American capitalists have been preparing for this new king since as far back as 2008. If you've seen my earlier videos, you know the context. But here's the gist. In 2003, Warren Buffett warned us leaders with a story about Squander Island and Frugal Island. The US, he said, was buying from the world with printed dollars, then borrowing those dollars back by selling treasury bonds. This cycle: spend, borrow, repeat, was unsustainable. If it kept up, Warren Buffett warned, the US would one day hit a wall where it couldn't repay its debts or keep borrowing. American capitalists listened. Since 2008, they've been quietly building a replacement for the dollar at the heart of global finance, a revolution that's been in the works for years. When a country keeps printing money and lending it to itself, the inevitable result is worthless currency. That's been the US trajectory. Since 2008, cutting rates stopped working, so the only answer was more money printing. By 2020, faced with the pandemic, the US printed even more, far beyond previous limits. This reveals a critical truth. Traditional tools like rate cuts and money printing have lost their power. The system is cracking. Now, the US can't even cut rates safely. Last year's rate cuts led to a loss of confidence, a falling dollar, and a stock market crash. Even Warren Buffett, usually optimistic, has become bearish. It's repeatedly warning that the dollar is in serious trouble, a huge departure for him. But Buffett isn't just warning about the dollar's fall, he's hinting that it's time for a new currency to take over. This isn't a peaceful transition, it's more like a rebellion. Remember when the dollar replaced gold? It didn't happen openly. The US quietly pegged the dollar to gold to build trust, then slowly took over, finally breaking from gold only when there was nothing left to lose. Today, history repeats. Stablecoin is the new challenger, quietly pegged to the dollar as the dollar once was to gold. The playbook is similar. First create trust, then gradually take the throne. The old plan was the gold standard. Today, it's the Genius Act. But what is a stablecoin? To understand, look back to 2008 and the birth of Bitcoin, the first digital decentralized currency. Like cash, it didn't rely on physical form or central control, offering a new vision for the future of money. Now, stablecoins are positioned to take the next step in this ongoing financial revolution. With Bitcoin, as long as you remember your password, you can access your funds anywhere, anytime. The key difference? Bitcoin is decentralized, not controlled by any government or institution. This anonymity attracted massive amounts of both legitimate and illicit money from around the world. Publicly, US officials dismissed Bitcoin, calling it speculative and unreliable. Privately, they allowed Bitcoin futures to launch. Contradictory? Absolutely. The strategy was clear. By labeling Bitcoin speculative like stocks or commodities, the US made sure it wouldn't be seen as a real alternative to the dollar. Highlighting Bitcoin's volatility reinforced the idea that it's too unstable to be a stable currency or store of value. Bitcoin's wild price swings make it tough for everyday transactions. Imagine buying a house for 10 Bitcoins worth $100,000 today. If Bitcoin drops to $10,000, your 10 Bitcoins are still worth just $100,000, no better off. Your currency is unreliable. This is why we don't use stocks for purchases. They're too unpredictable. Similarly, banks don't accept full stock value as collateral. Bitcoin faces the same issue. Its instability prevents it from replacing the dollar. The US seized on this, labeling Bitcoin a speculative asset and reinforcing its volatility. Many believe the US is fighting Bitcoin's rise. However, since Bitcoin is decentralized, they can't control it. They can only shape perception, portraying it as too unstable for real use. Bitcoin has become a tool for money laundering and wealth storage. With its value manipulated over time, this set the stage for the new king. For decades, the world's wealthy kept assets in Swiss banks due to privacy and neutrality. But after the 2008 financial crisis, the US pressured Swiss banks to disclose account information, ending their era of secrecy. As privacy vanished, wealth flowed into Bitcoin, which offered protection from government control. Bitcoin's price surged, but its volatility was too much for the wealthy. Enter stablecoins. Stablecoins pegged to fiat like the US dollar counter Bitcoin's price swings. If you have $100,000 in Bitcoin but fear a drop, you can convert it into stablecoins, locking in the value. Stablecoins make up most Bitcoin trades and can be quickly swapped or used for transactions. Stablecoins also revolutionized international business. Traditional cross-border payments required converting $2, using banks and waiting days. With stablecoins, transfers are instant, global, and bypass banks, undermining the US dollar's dominance in global trade. Traditionally, international money transfers involve lengthy applications and high fees. With Bitcoin or stablecoins, transfers are instant and cost minimal, revolutionizing remittances and business. This is part of the US strategy. Stabilize Bitcoin, then challenge SWIFT, the global transfer system. Now, stablecoins are positioning themselves as the new king of global trade. The next phase is legalization. Early crypto trading relied on risky private platforms, some of which vanished with users' funds, undermining trust. That changed last year when the US approved Bitcoin ETFs, making Bitcoin trading legal and accessible through regulated channels. This move gives legitimacy and safety to owning and trading Bitcoin. By legalizing Bitcoin and stablecoins, the US is integrating cryptocurrencies into mainstream finance for virtual currencies. 2. Become a real alternative to traditional money systems. You can now buy Bitcoin ETFs through any brokerage or bank, just like US stocks. Recently, a major US policy changed the stablecoin market. Stablecoin issuers must now back every digital dollar with a matching amount in cash or US Treasury bonds. This ensures your funds are always redeemable, connecting stablecoins directly to the dollar and the traditional financial system. But this is more than just convenience, it's a strategic move. First, it draws previously hidden money away from places like Swiss banks and into digital currencies, forcing untaxed wealth into the open. Retail investors are also being drawn in, not by accident, but by design. As Bitcoin becomes more of a store of value, stablecoins are poised to restore the utility of crypto as a true medium of exchange. Stablecoins could even challenge SWIFT, allowing faster and cheaper global payments. With stablecoins tied to US dollars and bonds, the US may be strengthening its dominance in the digital financial era. In short, this isn't just a new phase for crypto, it's a coordinated strategy to reshape global finance. From Bitcoin ETFs to regulated stablecoins, the future is here. Will you adapt or be left behind? It's easy to see why Bitcoin could soar to $100,000 in hindsight, but during trading, you don't have that clarity. No one can predict the future or access inside information. News only seems obvious after prices move. So how do you succeed in such uncertainty? Follow the game makers, big investors, and institutions. They don't announce their trades, but their actions leave traces in price charts. By tracking these patterns and money flows, you can align with the trends they create. If you haven't learned this method, Check out the link in the video description to join our investment class. It's free for subscribers, but spots are limited. Why all this focus on stablecoins and financial reform? With the new Genius Act, every stablecoin must be backed 1-to-1 by US dollars or bonds. Many see this as a return to stability like a modern gold standard. But the truth runs deeper than simple guarantees. Can you still take your US dollars to the Federal Reserve and exchange them for gold? Decades ago, you could. The dollar was a gold-backed IOU. Give gold, get dollars, and redeem them anytime. But as the US printed more dollars, especially during the Korean and Vietnam Wars, the system faltered. The French president noticed more dollars existed than gold reserves. He began stockpiling dollars and demanded gold in return, eventually withdrawing 3,000 tons. Other countries followed, and by 1970, over 8,000 tons of gold had left the US Treasury. The US couldn't keep up. It defaulted, refusing to exchange dollars for gold, ending the gold standard. From then on, the dollar wasn't tied to gold, it became the global currency instead. At one point, even Americans were banned from owning large amounts of gold, with prison as a penalty. By severing the gold link, the US turned its IOU dollars into actual money. The promise to redeem for gold vanished. But ask yourself, back then the IOU was in dollars. Has anything really changed or just the form? Now consider this. If the world demanded repayment of America's $36 trillion debt, could it actually pay? Printing more dollars would just destroy their value. So what's the solution? History shows the US can convert IOS into currency, effectively erasing the debt. Imagine stablecoins replacing the dollar. If one stablecoin equals one US Treasury bond, the US no longer needs to sell bonds to raise cash. When you exchange $10 billion for stablecoins, the issuer uses your dollars to buy $10 billion in US bonds. Every stablecoin is backed by debt, and the government holds your cash. The stablecoin issuer earns interest from the bonds, and the government keeps those dollars circulating. In effect, US debt turns into currency just like dollars once stood in for gold, and then became fiat when the gold tie was cut. With stablecoins tied to US debt, the government could do it again, transform its massive IOU into usable money. The debt disappears, a modern echo of the 1970s shift. Today, the US has created a new IOU, its national debt. That debt plays the same role dollars once did as a promise. The dollar is now currency like gold once was. And now, the US is trying to turn debt directly into stable currency, bypassing the dollar entirely. That's debt monetization, turning IOS into money. When the US abandoned gold backing, it told the world, can't trade dollars for gold, just use dollars as money. Now the same may happen with US debt. You can't redeem this debt for dollars, use the debt itself, or stablecoins as money. With $36 trillion in debt, repayments just mean creditors receive dollars, which then get swapped for stablecoins backed by US bonds. This cycle repeats. Dollars fund more US debt every time they're exchanged for stablecoins. The US never really pays the debt, just rolls it forward. The result? Circulating dollars shrink, and government debt is repaid with new stablecoins. These stablecoins backed by bonds can be used in everyday transactions, or even to buy assets like Bitcoin. Here's the twist. When you exchange $100,000 for stablecoins, the issuer buys $100,000 in treasury bonds. That lets you buy Bitcoin or other assets while also funding US debt. It's almost like doubling your spending power. The money supply stays flat, but available assets multiply. This setup quietly keeps us debt funded. Some doubt stablecoins could ever replace the dollar or solve a $36 trillion debt, since usage is only in the hundreds of billions, and if stablecoins were just for buying Bitcoin, they'd stay too niche. But what if stablecoins could also buy US stocks? Bitcoin was just a gateway. Now stablecoins are starting to be used for trading major equities: Apple, Tesla, Nvidia. That's a huge shift. Stablecoins are breaking out of crypto and into the $60 trillion US stock market. Imagine stablecoins becoming the bridge to that market. Suddenly the $60 trillion equity market could help absorb and offset the $36 trillion in US debt. Now, about that debt, most of it is actually owed to the Federal Reserve. The government essentially owes itself, so repayment isn't the real issue. Whether outside investors buy US bonds matters less than it seems. Enter stablecoins. As people use stablecoins to buy US stocks, those dollars can be redirected into US bonds. There's no hard cap on stablecoins, so the US can issue as many as needed, funneling constant capital into its debt markets. When Warren Buffett says the US dollar is going to hell, he doesn't mean it's going to zero, he means it's being replaced. Holding short-term treasuries, as Warren Buffett does, is practically the same as holding stablecoins. Even former critics like Donald Trump are launching cryptocurrencies and stablecoins, building new wealth fast. Bitcoin, once doubted by many, paved the way for this next era. I still hoard Bitcoin for this reason. Here's my advice. Take the time to truly absorb the logic behind our strategy. Once you understand the underlying approach, you'll be able to apply it independently with confidence. If you haven't already watched our stock investment class, make sure to check it out soon. It's still free and packed with valuable insights. And if anything in today's video seemed unclear, I encourage you to revisit our previous videos. They're designed to build on one another, creating a comprehensive and actionable framework. For those who are new here and haven't seen my earlier videos, you might feel like I'm just analyzing things after the fact, but that's not the case. Much of what we discussed today was covered in detail long ago. Can't recap everything in every episode. They're key to understanding the logic behind our strategy and how all the pieces fit together. Things are certainly getting more turbulent now, and there's plenty more to discuss, but for today, I'll need to wrap things up. Don't worry, the next episode will be packed with fresh insights. I know many of you look forward to our weekly forecasts, and I promise to deliver even more value. This channel is all about empowering you to become a confident investor. Make sure to subscribe and turn on notifications so you never miss an update. And if you found this video helpful, please share. It's a great way to spread valuable knowledge and help others. I hope everyone watching is on their way to achieving financial freedom. If you have any questions, drop them in the comments. I'll do my best to reply and provide guidance. If even one idea from today's video makes a positive difference in your life, I'll consider that a success. That's all for this week. See you in the next video.